The broadcast is now starting. All attendees are in listen-only mode.
Hmm. Hello, Warriors. Everyone doing okay? Everyone handle Black Monday with a cheery turnaround Tuesday here? Can everyone hear me? Give me a Y if you're there.
I can hear you, Coach. Good morning.
Hey, Stel, my brother, my trading warrior brother. Good morning. Okay, you know what I'm going to do, guys? You may want to take a Dramamine. Hi, Russell, because I'm going to take into my head and, what I'm thinking in the morning and conflicted days, and I have a lot of them today, so just want to show you that it's really a process, and it really all comes down to the best trades are the ones you plan, and those are the ones you go with. So I want to start off with the euro. So we're looking at the 4 hour, but I was talking about it with some friends over the weekend when we were here, that there could be a three drive to a top formation. Here's one, two, three, but I didn't act on it yesterday. So, do I want to get short? I don't know. I mean, we're right in the box. We're holding this breakout of, you could call it a smaller ascending triangle, right? Flat. Had a test here. To me, it really looks like this is a box. So, I didn't take the short. I'm not sure I want to get short here in case we do have a breakout. I'm not sure I want to get long in case it's a failure. I really think we'll know under 112. But again, here's this bottom wedge line. Let's see where it comes in today. Oh, shaky hands, Dale. Okay, around 1180 or so. Okay, so that's going to be a pretty good sign of it taking that out. I think we have a shot for new lows. But right now, I feel like I have to go with the long side of euro. EG is working. Okay, I mean it's threatening again. I tried it last Friday, got stopped out for 60 pips, and that was a low. And the recommit, what a great rally we've had. So okay, so I'm conflicted on euro. Can you see that? So what do I do when I'm conflicted? Maybe wait for a signal, something a little bit more definitive. Which I always like to. You're in my head now. I really would like to have a lead going into a signal with a piece on, because it's hard if you don't buy it here to buy it at 1260 when you could add it here. Do those thoughts go through your head? Anyway, if you have to talk to yourself about, you know, uh, a bunch of things, you just say pass. Let's see what else is going on. Well, we go the yen, and it's had a nice recovery off of yesterday's lows at 109. It actually got back above the double bottom that Blake was talking about yesterday. But, yeah, I want to short it, but I'm not sure if this is enough. I mean, it was a confirmed low, because I'm conflicted with shorting the yen here in case there's more of a correction in the S&Ps. Okay, and it's possible. I mean, we've had one heck of a break, right? We could even rally, halfway back. Here's your daily. Yeah, why couldn't we get a rally back to the 50-day, 2860? And I'm sure it's some fib number up there. Jim Walsh, I read his stuff last night. He's saying, get out, raise cash on rallies at 2870. So, do you understand that it's hard for me when I think the S&Ps have more left for a correction on the upside for me to want to short the yen? Okay. Here's another one, crude. And, I've been kind of had my finger on the pulse here yesterday. I'll just tell you it's pure luck that I covered my longs up here. Okay. So this was my thought process here for covering the longs from the buy on Sunday night. Um, I was just too fearful about what was going on around me with risk. So I said, God, you have something on a day where almost nothing is up except gold and bonds, and they normally connect. I said, you know what? Okay, if it keeps going without me, let it. And I booked it, and then I went to have a few medical tests yesterday. Actually, I do have an announcement. I had an ultrasound, Ziggy, done on my abdominal area. Anyone ever have to have ultrasounds done? And I have to tell you guys, it's a boy. Yeah, it's a boy. Anyway, so crude, look at what crude did. Okay, so it shook out the bears, then it shook out the bulls, and now it's back inside the formation. And if S&Ps have it failed from 50% back, you know, I mean, sometimes I didn't really have a lot of clarity yesterday with everything going on. So things happen, but I was thinking higher, but it failed from maybe that's it. Pretty negative candle. But now we're right back in this formation. So you know what this formation is worth to me now? Get out your etch a sketch, shake it up, and get rid of all your lines. Anyone ever have an etch a sketch? I bet Blake had one. All right, so you know what? I don't know what to do with crude here either. Thank you, Forex Gal. Um, you're invited to the baby shower. Okay, so the only thing I've done on Turnaround Tuesday, and I was even conflicted about this, was trying to bottom pick Aussie. Okay, because I talked about it. This was planned. And why am I conflicted about trying it here on a 3 drive? It's because I like to buy the relative strength, and the Kiwi is outperforming Aussie. So I'm buying the relative weakness. I never feel comfortable doing that, but I have a pattern to try. Tight risk. I'll risk 30 here and see what happens. But again, even the one I'm in, I'm conflicted because it's not the relative strength. See that? Aussie up 2 pips, Kiwi up 14. Everyone know to go with the leader, belong the leader, not the weak sister. And I think that may continue for a while because potentially this is something I'm waiting for. And I'm going to turn it over to Blake after I talk about you guys signing up. Oh, yeah, here it is. So I actually think that the Aussie Kiwi is going to give us a nice buying opportunity around 104.50, maybe around 61.8, maybe at 50%. But, some type of corrective. This is a great move. So, I want to start looking at places I could start to probe the long side of the market because I don't think we're just going to abort and go to new lows here. I think this was pretty impulsive, even though I know absolutely nothing about Elliott. I don't know why I say it. Anyway, it got there in a beeline. How's that? Old school. It went fast. It went fast. Okay. So I mean, so if I think this is moving lower, that should mean that Kiwi continues to outperform the Aussie. Anyway, I'll just lower my expectations if I get a pop. And uh, gold still looks good. Everyone commented on how silver really lagged. It certainly did, but there's Steve Volge's wedge. So, if we get some more dollar weakness, and that's the other issue, is the dollar had a nice little 3 driver, but I didn't act on it. But watch silver for a breakout out of that falling wedge. That could be a nice one. We have so many great technicians here at ForexAnalytix, so many good minds collaborating with each other. So the Dixie did the opposite of what the Euro did. I mean, it's pretty obvious. I think by now you guys are starting to recognize these patterns here. So I didn't act on this, and I have a hard time getting long here. and it might be a 3 drive to bottom. There could be more left. And I would know what I would do if it got up to 97.80. I have confluence with a descending triangle up there. I might try it up there. So that's it. So how did you like being in my head? It's not easy, is it? I'm telling you, many professionals have given their best efforts to help me. But you know where I've gotten the most help is with my camaraderie, with my contemporaries here at ForexAnalytix. I'm telling you, it's the best therapy money can't buy. Just being around guys that are positive all the time, having someone that interrupts a lot like me. So, I'm not the only one. You know who it is. And really great to be working with Blake Morrow. I used to look forward to interviewing him on FX Street, and I get to talk to him every day. So don't quit your daydream, okay? Give me a why if you're not going to quit your daydream. Ziggy got scared. All right. Don't quit it, guys. Persevere. Okay, guys. Good morning, my friend Blake Morrow. Save me from my rant.
My gosh, good morning. I'll take over.
All right. Were you in my head? What would you prescribe?
It's a very dark place.
Yeah. Well, the light bulb comes on.
Yeah.
Every day at 8 a.m. to 9:30 a.m. Eastern time.
Wow, what a great place to be. I'll tell you. So, it's well. First of all, congratulations on the baby boy. And I was gonna say I was thinking that you went to the doctor and they came to the conclusion you have the perfect dad bod.
Oh yeah.
So the FX market on another note, the FX market is very, very slow. We woke up today to a pretty slow market, which after the last couple of days of volatility has been it's good.
I mean, even during that, Blake, do you consider it was fast with what was going on yesterday?
No, I mean, the S&P had a nice little sell off. We hit the 618. We're testing big breakout point. We actually closed below this breakout point. Now we are bouncing.
Yeah.
I expect the bounce to be, probably, if you think about what we're doing here, let me get rid of this stuff.
Is that your target, like 2680?
No. I was just pointing more directional than anything. But if you think about what we're doing here, and you just think about what nothing goes up or down in a straight line. So, we're moving lower, but we're bouncing right now. It is turnaround Tuesday, so everybody's expecting the market to bounce back today, which it has. I mean, we're bouncing back. Whether it can sustain or not is another question. But rallies to 2840 probably going to find sellers. So I would think that if you're trying to sell, the S&P, you look for rally towards 1240 or 2840, excuse me, and look for a selling.
Boy, are you bearish? That's a Freudian slip. 1240 S&P.
1240, yeah. I mean, imagine. Holy cow!
No, I can't.
That would be something, but yeah, I mean, you have to use these rallies as opportunities to sell into when you're in this type of environment. The euro is actually coming under a little bit of pressure. There's some Italian. Hold on, the euro. Salvini says Italy ready to break EU fiscal rules. Oh. That's not good. So
that's a 3% rule, right?
Yeah, I think
he was already talking about it. Good morning.
Good morning. Yeah. So I mean, you look at the euro yen. The euro yen's buckling under a little bit of pressure here. So So we're seeing this euro actually really roll over here, really coming under some pressure. We have a nice little head and shoulder pattern too. And
the euro nobody expected that from Italy.
Yeah, right. Exactly. It's very yeah, exactly. We didn't no one expected this type of action. Let's just keep an eye on the euro dollar, because the euro dollar looks like we're going to push back towards 112. And yeah, gosh, that's under. Here we go. Boop, 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 boop. There we go. There goes the euro. Wow. Wow. I did not expect that just to really come under pressure like that. And I didn't have my right sizing up either. Wow, the euro's really buckling here. I'm going to do something really quick. I'm going to, wow. Let me go ahead and I'm going to go ahead and cover up I covered up my dollar yen shorts. Some shorts in the dollar yen, just covered those up. Give me a second.
You know, Blake, it's actually not the budget rule. It's apparently he said they're ready to break fiscal rules. So yeah, it's a different thing today. So they're breaking every rule basically. That's it.
That's good. Yeah, that's what that's good. Good news. God dang it. Trying to damn. Hold on. I'm trying to do some things over here, and I'm on the wrong screen. Hold on. Give me 1 second here. The euro, I wouldn't be buying this dip. I'm actually just trying to scale out of some dollar yen shorts. I'm more worried that the dollar is gaining strength. My short dollar yen is at 109, 109, basically 109.50. But I'm going to cover it up here because I'm more worried that the dollar is going to, just trying to gain some strength across the board. Oops, damn it. I keep grabbing the wrong thing. Sorry, guys. I'm in the middle of trying to do some stuff. As you guys know, I trade myself. So for myself. So, well, not for myself. I trade for Gela. So I just wanted to make sure that I didn't have exposure so I could focus on what the hell is going on over here. Okay, so now I've just did what I had to do. So watch the euro on rallies now. Any rally up to 1220 should find some sellers. I might actually sell some euro up here if we get a little bit of a bounce. So that's what I'm going to be looking for. But that euro yen really came under some pressure, didn't it? Oh yeah. Let's see here. You know what pair might be actually a good short right now is the euro pound. Take a look at that. Ooh, you know what I like about the euro pound is this. Right there. I might sell some euro pound here.
Nice little false break.
Yep. I actually sold a little bit. And as long as it stays below 80, I think I'm going to stay on the short side of that. So let me put in my stop. Quick. I don't want to trade naked. If you know what I'm saying. Not that kind of naked.
Please no.
Yeah. Oh, shoot. Damn, I got the wrong size on either.
Keep your shades drawn, bro.
If you have to do so, please set your camera.
Okay, let's see here. All right. just trying to.
Steve, don't get excited now, man.
All right.
Be careful, Blake.
I'm all set up. So yeah. I short a little euro pound. I think this is I don't mind having exposure here in the euro pound currently. So because I think the pound probably is a little oversold here. Dang it! I put my glasses on. Okay, and I don't wear glasses, although I should wear reading glasses, but I actually do have to use reading glasses. Stelios, you and I are the same age, roughly,
Yes,
within
yes,
about
we
6
are.
months of each other.
61.
Do you wear glasses, like reading
I
glasses?
I don't yet, but I have to, when I look at my phone, I have to put it a little bit away. And I guess when my arms are not long enough, then I'm going to have to get glasses. But
So
I'm
you
close.
guys are getting nearsighted.
Yeah,
Yeah.
it's nearsighted, right? And I
Yeah.
mean, that's just age. I mean,
Yeah.
that happened to me about a few years ago. So now,
magnifiers will work for you too, Blake.
yeah, I don't want to wear magnify. I don't want to do magnify. But actually,
All right.
yeah, I'm.
All right. No pressure here, man. I don't.
All right. So
I'm
what's
not in the business.
retracement of the cable? As long as the cable can hold this, I think the euro pound is probably a decent short, because that little false breakout here is going to be. I think it's playable, and I'm going to try to play this euro pound back down towards. I'm going to try to play it. If this is a range, I'm not going to try to capture everything out of this range. That's just not the way I roll. I'll probably try to play this back down towards like the 86 pence level, somewhere down there if I can get it. But anyway, I think that's that's a doable range with this euro pound, and it's stopping shy of the 38% retracement. I got a little false breakout, so like I said, I'm going to try to play the short side of that. Now, I was just saying that there wasn't anything happening in the FX market, which it's been pretty slow overnight. The euro, I think you have to watch it if we get back down towards 112, because if we break through 112, that's going to be kind of ugly for the euro dollar. But I was short some dollar yen overnight, and I sold it last night at 50. So I had an order to get in at 50 right here. So it was in Asia. I was actually at Costco of all places, and I got my order filled, and I put in my stop above 110, and I was short. Now I closed it out. I took like a 6 pip loss, and the reason why I did that is because I think I'm going to be able to get a better. Well, I'm hoping I'll get a better entry. I still want to be on the short side. I just think I'll get a better entry if the dollar was gaining strength across the board, which you saw the euro and the cable were coming down. So I was thinking that the dollar might actually firm up a little bit against the yen. But ultimately, I want to be short the dollar yen. So I'm going to try to short that again today. And if you're a ForexAnalytix subscriber, yes, I do have a pattern in play for the dollar yen. I do think that the dollar yen, while it's below 110, is a short, and that was a freebie for those of you that are not subscribers. I'm looking for a move down to 107, 60, 50, 75. You can see that here. I'll just give you the target here. Is at 107.75. I wanted to get ahead of this 618 retracement, which is ultimately right here, right there, right. But so I think your risk is here. Your reward is down here. It's a good risk reward to be on the short side here. But I'm going to see if I can get a little bit better price this morning. I still want to be on the short side, even though I don't have a current position on right at this moment, because I just closed out for a few pip loss. I think I can get positioned better. Now, I may be wrong, and perhaps I end up missing it, but it is turnaround Tuesday, so I expect stocks to be strong today. I expect them at least to have some sort of bounce at least until midday. So that's why it's like, okay, well, if the S&P is here and I think we're going to here, that's another 15 S&P points. If we rally another 15 S&P points, then the dollar yen might you know, from this from the mid 50s here where we're currently at, we might get back up to 80, and then I could look for a short up there. That's the way I'm trying to play it. Whether that works out or not is, doesn't you know like I said, I plan on things happening. They don't always work the way that I plan, obviously, but and that's what I always try to encourage every trader is you think about what you imagine is going to happen and play into that scenario. So like for example, last night I imagined that the dollar yen was going to rally from here, but I thought it would stop, here and then reverse. It didn't, so I just, took a small loss just a bit ago, and then I'm gonna, try to get back in. I still imagine it's the ultimate move is lower. I just want to get positioned in a little bit better price. So, but that's how I'm gonna play the dollar yen today, hopefully. So anyway, we got a little action this morning, guys. It was very slow in Europe overnight. Steve, Stelios, I'm sure you guys noticed it was a really slow night.
Yep. Absolutely. I mean, the only thing that was happening this morning was the Trump tweets.
The market's become quite numb to his tweets.
Yeah, true, and also he changes from one day to the next. Like the last couple of days, he's been quite aggressive, and this morning he was, where when the time is right, we'll make a deal, and we're both heading towards the right direction. Blah blah blah, and the trade deal, when everything's aligned, the trade deal will happen much faster than people think. So he kind of switches from one day to the next. So it's very hard to make any sense of it. But
plus his tweeting from a negotiating perspective make no sense whatsoever.
Yes,
I mean,
well, maybe he knows people are getting bored with his tweets, guys, and like Blake saying, they're becoming ambivalent or numb to him. So now he's moving military assets to the Gulf, B-52s and everything else. And I think crude is up today despite the reversal because there's some geo risk in the Persian Gulf right now. So he is, they have done drills, and it looks to me like something could happen in the Persian Gulf, or they wouldn't be moving that many military assets to the zone. They want to protect the oil lanes. So
that would be a nice way to also
distract from Mueller and everything,
exactly.
right?
Shift the conversation, the political agenda to other. Yeah, exactly.
Don't you think, Blake? I mean, everyone gets behind a president if they're, no matter how you feel, because then it's about your country, right? I don't know.
Yeah, I mean, I think it's going to be a lot of diversions, and as we move into this political, election cycle. So, Steve, I just passed you the charts, but hey, guys,
Good luck.
I was going to say I'm going to go, but before I do that, I wanted to say if you want, want the rest of the analysis, I do all the analysis for basic technical analysis and candlestick analysis overnight for ForexAnalytix throughout the course of the week, so you can get my analysis there if you're like, oh man, he didn't cover the Aussie or the Canadian, but also make sure you visit our partners here at Forest Park FX for the reimbursement program. If you're not a part of ForexAnalytix, but you do want to join, you can use your trading to help compensate for the for your ForexAnalytix account. You just have to join the reimbursement program, which there are links to contact Forest Park FX right on that page that Steve is showing you. So make sure that you visit that. All right.
Yeah, even if you just need some advice on brokerage firms and what choice is best for you.
You know what the biggest edge is, in my opinion, guys, is that the research is fantastic, but you know what? You could be in the room with Blake and see what he's doing. He puts up charts all through the trading day, not just for 20 minutes. And you know what? Blake will answer a question. If he's busy trading, maybe not, and plus the community. I mean, you have a bunch of pros in there. You have Amanda in there. You could ask questions, interact, and have the support of a community. You can't do this alone. I'm not, Hillary Clinton, but you know what? In trading, it does take a village.
It does,
So,
and it's good to have the support there of other traders and being able to bounce ideas off of one another. And I'm there throughout the course of the day, and I know a lot of our team is too, especially like Amanda and Paul Franco, where you can just say, hey, what do you guys think of this? And Andre's been in there a lot this week. It's been really nice. So.
In my opinion, Blake, just that the private member chat is worth the price of membership if there was nothing else to ForexAnalytix, in my opinion.
Maybe Steve can show what the chat is like and how you access the charts, and you can see different people, and how you can actually search for different users. So Steve just put everybody on Jumbotron. Anyway, I'll let you guys go. Have a great trading session, guys.
Thank you, Blake.
Thank you, Blake. Okay, we don't have any numbers. No, we don't have anything right now. We had some minor numbers, important.
Nothing. Nothing.
Lower than expected, but really, no market's going to move.
Nothing that would move the market anyhow.
Yeah. We actually didn't really have that much overnight. We had a few prints. CPI out of Germany and Spain in line. Sweden slightly better. The only real kind of important number we had was from the UK, where average earnings index came in at 3.2% year on year versus 3.4 expected, so lower than expected, but still above 3%. So we've said this before, the gap between earnings and inflation is still quite big. So that's good for the consumer. Although we have to look at the trend, and if it starts dropping, then clearly that's going to be a slight issue for the pound. We also had unemployment numbers. So the claimant count change came in roughly in line. Unemployment rate actually ticked down to 3.8% from 3.9%, and in line with many other major economies like the US. In Japan, you have really good employment. Like unemployment rates are near all-time lows, and then the question, though, we have to ask ourselves is what kind of employment is it? What kind of quality jobs are being added, and full-time versus part-time.
As we know, every year they become lower quality. Globally, that's a global phenomenon. It's not only in the US.
Yes, and skilled labor versus McJobs and low-skilled labor. So that's something that you need to look at. But as a headline number, unemployment rate at 3.8%. In the UK, and it's a very similar number in the US, right? It's 3.8, if I'm not mistaken. It's it's fantastic. It's really fantastic.
Yeah, it's a good number.
Yeah, and what else do we have? We talked about Trump and how we're toing and froing. The interesting thing is that China, although they did say, "Oh, we're going to reciprocate in terms of tariffs," they've been quite. Well, let's say they're less aggressive than Trump has been. So yesterday there was a statement from China, from a Chinese government diplomat. I don't remember the name, but I saw it written in an article, who said that both China and the United States have both the ability and wisdom to reach a trade deal. So they're on the Chinese side. They're still pretty constructive, and they're not as aggressive, but. We clearly have to wait and see what's going to happen, because Trump is kind of leading the way at the moment. And we had Italy. Yeah, we talked about Italy. We also had the Bank of England's Cunliffe, who said today, just a little bit earlier, that it's not a certainty that Brexit will actually happen in October, and the deadline will not be pushed further in the future. So a lot of fun and games may be left for a few more years. I don't know, but yeah,
that's what we wanted.
Oh yeah. Well, let's see. May. Yeah, Theresa May, I think yesterday or the day before, she said she's gonna open. Yesterday, she said she's gonna open up discussions again for the withdrawal agreement. I mean, the European side, they've been pretty adamant nothing is up for discussion, but she seems to think that it might be up for discussion. But a lot of deja vu when it comes with the UK.
Yeah, good luck with that.
Yes, and that's it. So you can carry on with the charts if you like.
Okay, great. So let's see what we have. First of all, I wrote yesterday in the chat room. If you remember, I said it here as well. When we reach this zone, don't forget that I said yesterday that this is the next area of interest in the S&P. We hit that zone. We actually today we even tested the waters below it, like very temporarily, and we're rebounding from here. So as you see, there's a reason why I keep horizontal support resistance zones. That's because they tend to work, because the market has, in quotes, memory. Now, what's going to happen from here? Things are quite clear. As long as we remain below this previous support area, which shouldn't act as resistance if we manage to retest it, the path of least resistance for the time being remains lower. Don't forget that a full retracement of the wedge, which is what the technical theory would suggest, should bring the index down to like 2720. So, keep looking lower. I closed part of my short position yesterday there, and, holding the rest for lower levels. Hopefully, if nothing weird happens, we should see that. Exactly the same deal with the Nasdaq. The Nasdaq had a stronger move lower. Regardless, it also stopped where the chart was telling us that it could stop, right, at another horizontal support resistance area. DAX, more or less same deal. As you see, it stopped side, just side of this ascending trend line support. So, what's out a little bit here, don't forget that 11,800 key level. So if for some reason you want to have like long exposure to the DAX, this is exactly the area that you would be looking to do so. Personally, I'm not looking to buy it. I'm just saying that, if you have your own thesis and you want to buy it, this is where you want to do it. Risk reward ratio is definitely in your favor, and huge technical support is also in your favor. Now, if we slice through that level, I would definitely not be holding any long positions after that. Okay. Now, if you remember, I was a little bit surprised yesterday of how underwhelming gold's reaction was to the news. Because gold was, in essence, at the time of the webinar, doing nothing. I mean, we were just here retesting this descending wedges resistance, and gold didn't really seem eager to move higher. Silver was actually at that point of the day lower in the day, which I found quite surprising for gold. I mean, so gold did react. It reacted later than I expected, but it did react. And as you see, it has now broken above this descending wedge. So I do think that it's worth trying the upside. I actually closed the remaining of my short position, took profit on that. I only had 1/3 of a position left, and I reversed it actually to half a position long. And I'm willing to buy more gold if we come back to retest this area at 1290. You can actually see it here on the daily, on the 4 hour. If we come back to retest this area, I'm willing to buy even more. For the time being on the 4 hour chart, we're just holding some horizontal support resistance area. So we might not even retrace that much. That's why I wanted to have some exposure already. And next move will be a retest of this previous high at 1310. And, that's quite a conservative target to the upside. So, gold is, as I said, has turned higher, while silver is still lagging. You can see it here on the 4 hour chart. It has yet to break out from this wedge. It will probably do so as well. But even if you have a look at the gold silver ratio and be cognizant of what are the factors that are pushing gold higher at the moment, you will realize why it's a much safer bet for you to be buying gold instead of silver here, right? I mean, gold is overperforming, and as long as the situation is still volatile, it can easily continue to do so. Nothing really has changed with platinum, palladium, etc. Copper had a bad day yesterday, unsurprisingly. Keep in mind that it's currently testing the lower boundaries of this horizontal support resistance area, it can easily slice through that as well and keep moving lower. You know that what happens with China is quite a big factor in how copper moves. So the path of least resistance remains to the downside. Now, Forex says Blake doesn't use glasses. He drinks straight from the bottle. um, Currently, crude is in a downward trend. Do you think it will retrace to 60, 80? Okay, let's have a look at crude. So, crude, if you remember yesterday, although crude was pushing higher, I was telling you that we have a divergence between what's happening with risk and what's happening with crude, and I'm not trusting this move higher for crude. That's exactly why I'm not willing to close the remainder of my short positions unless we close on a daily closing basis above 62.75. By the time the day closed, crude had completely reversed its gains to actually close lower. So yes, the path of least resistance, in my opinion, remains lower. And the next area of support, in my opinion, is roughly at 60, 20. Okay. So yeah, it is very likely that we're going to make it there. It is also very likely that we're going to make it lower to 58. 58 is quite an important horizontal support resistance area. So yeah, it's easily doable to make it down to 58. I mean, not a big move considering the move we had higher, it will still be a very minimum retracement of what has taken place in the prior months in the bigger trend. Do you think palladium will hit 1265 again? Let's pull up the palladium chart. It might. I don't like the reaction from 1265, unfortunately. Unfortunately, it wasn't 1265 because that would have closed the remainder of my position at a very, very nice profit. But unfortunately, we stopped at 1266. So I'm still holding the last part of my short position. It's deep in the money, of course, so I don't mind. But it would have been nice if we made it $1 lower, and I would have been out of position. But yeah, we can still move to 1265. We can even still move lower than 1265. Okay. Yeah, absolutely. Even the quality target of ABC, for example, could even point to a move towards 1,176. We can even make it to this confluence of supports at 1,135. So yeah, I mean, we've had quite a reaction from there. But does this mean that palladium has turned bullish? No, we don't have evidence to say that yet. So yeah, it can definitely do so. Could you please take a look at euros? Yes, I can take a look at euros, and we might as well take a look at the rest of the crosses. So euros actually closed above this rectangle's resistance. Okay, so you see we were trapped in a range since the very, very first days of the year. We were oscillating between this 160, 150 roughly area and 157.20. So yesterday we actually closed above that, just above that. Now, is that enough to validate a breakout? Not really, because it was like incrementally that we closed above it. I want to see what's going to happen today. Now, if that gets confirmed, then we might continue moving higher towards 165.55, which is this previous peak. So yeah, be careful. It's in danger of breaking out to the upside. We definitely know as a fact that you would expect these crosses to overperform as long as risk is lower. Um, and for the time being, the risk is lower. So that's it. Now, having to do with Euro Kiwi, and then we can have a look at Pound Aussie and Pound Kiwi. Now, the situation with Euro Kiwi is, quite, more easy to read here. As you see, this is the confluence of this previous horizontal support resistance area. As you see, we had a high there as well. And don't forget that a few days ago, in the middle of last week, we actually hit this ascending channel's resistance. That was actually the high. Since then, we haven't managed to penetrate through that. So Euro Kiwi, more or less, also on the resistance. Euros is slightly above it, but we can have like little overthrows like that. So Euro Kiwi right on resistance. If we break above there, the next upside resistance is close to 175. But be a little bit careful because we might get rejected from here. So Euros and Euro Kiwi, if we see some jump in a risk, especially, we might both get rejected from current levels. So what I'm trying to say is don't try to buy them right on a resistance. You either wait for a breakout and then a pullback to retest the breakout area, or you just buy the breakout. Depends on how you like to get exposure in the market. Both methods are valid. One of them gives you more trades, lower win ratio, but on the other hand, you don't miss some profitable trades. The other one gives you more of a confirmation, but you might miss a trade that will not come back and retrace. So it's purely a matter of preference, okay, and trading style, nothing else. Now, Pound Aussie has been, Pound Aussie and Pound Kiwi have been doing worse than Euros and Euro Kiwi. Pound Aussie found a high actually last week. You can see where that was a huge level, previous high, this expanding, the megaphone formations expanding triangle, you can call it as you wish. It's the same deal exactly, trend line. And we got rejected from there. So, against that area, being short makes sense. I mean, keep in mind, this is a formation that dates all the way back to March 2018, which in essence means like, what is it, like 14 months old. So, you definitely don't want to be buying resistance at a formation that has been holding for, such a long time. Now, Pound Kiwi, quite a different situation here. We were monitoring this wedge, broke to the upside, has come back now to retest for the second time this previous resistance trend line as support. So, what happens from here is quite important. If we hold this level, then, you can maintain a bullish bias if you have one. If we drop below this trend line once again, then all eyes are on this ascending trend line support. As you see, this ascending trend line support has been tested from the market multiple times. It has held each of these times going back to the end of last year and defines the current uptrend. So, if we drop below within this wedge, and especially if we break below this ascending trend line support, then I think that the pair is going to move lower by actually gaining downside momentum. So, I wouldn't be doing something here, but if you want to be a buyer, I understand why you want to do that, right? Because we're on trend line support. Personally, I'm not doing it, but you like it to the upside. This is where you buy it, and from a simple risk reward perspective, you have a setup trade here because you're wrong if we make it below there, and if you want to be buying here, your first target can easily be this previous high up there. So as you see, without even measuring, the risk reward is a little bit more than 1-to-1. So, it makes sense as a trade. It definitely makes sense as a trade. You buy here, you take some profits if you make it up there, then you hold the rest, because if we break above that, then we might be retesting these highs roughly at 2. Now, on the other hand, if we break below this trend line and this horizontal support area, you're wrong, and you either close your position at a loss or you actually flip it to a short position, because then you have an important technical break to the downside. So, if you constantly want to be in the markets, there are always ways to do that that make sense, I mean, that are not nuts. For your information, Steve, Trump just tweeted out that the Fed should match the Chinese currency manipulation with Fed manipulation. how exactly is the Fed going to start manipulating a market that they've been manipulating for years? Yeah.
Trump said that China, if the need arises, they're going to cut rates, and he said that if the Fed matches this, then the US will win this trade war, basically. So basically, he's urging the Fed to follow if the Chinese start cutting rates.
Stelio, I had no doubt that the only positive that Trump could take out of this, and he's definitely going to use it in that way, is to use the breakdown of the negotiations to push the Fed to ease, because this is the only actual benefit that Trump can now be looking forward to. So he knows that the market is going to react negatively to the breakdown in the negotiations. But why not try to compensate that by getting the Fed on board with easing? And he might actually succeed in that if the markets react negatively to this, because so far the pullback that we've had is not enough to scare the Fed. We know that the Fed is acting according to what stocks are doing. I mean, we've seen that over and over again. That's why, if you remember, my theory is, and I have expressed it here several months ago openly, is that the market not only has the Powell put, or the Fed put, if you want to call it, but it actually has a collar, because after a long time there is even a call there. Why? Because market doing very, very well, in essence, pushes the Fed, makes it easier for the Fed to be on a hiking path, even a much slower one nowadays, while markets, not doing well at all, obviously pushes the Fed to ease. But in between, the Fed is neutral. So, near all-time highs, the Fed is not doing much. If we are at all-time highs, the Fed might even consider, doing a hike here and there. If the markets react a lot negatively and they seem like they're breaking down, then I have no doubt that the Fed is going to help. But it's not going to just help because the negotiations are breaking down. It will actually have to have some tangible evidence to do so. And so far, as I said, the pullback is really, if you zoom out in the chart, you can't even see it. I mean, it's so minuscule that it's not enough. So yeah, if we make it down another 100 handles of the S&P, then the Fed will start trying to find other excuses, because the Fed will never admit openly. I mean, everybody knows it, but they will never openly admit that the only thing that dictates their policy perspective is asset prices. Because let's be honest, the only thing that keeps this economy going is asset prices and asset valuations. If that last and almost only pillar breaks down, then it's bye-bye. It's, we're in the next recession, which sooner rather than later will happen anyhow. Question about the pound yen. I think we had a look at it yesterday, and perhaps I was looking at it on my own. I don't remember, so I don't want to be misleading here. Actually, if I remember right, what I was looking for, and I was thinking that it was a good short-term trading opportunity, but I'm not a short-term trader, was this. I was looking at this the other day, this little triangle textbook. I mean, if I was a scalper, which I'm not, because I don't like this kind of a trading style, simply because you have to be on alert all the time. And, I'd rather be more withdrawn from the markets. I don't want to care about what's happening, every hour, every minute. But if I was a scalper, these kind of formations are the kind of formations that I would always be trading. So you have quite a strong downtrend. You have then a textbook triangle, and the moment you see this triangle break and you see the first acceleration candle, then you know that there is more downside. So as you see, the path of least resistance after breaking through this descending triangle remains lower. Okay, quite simple as that. And in my opinion, as you see here from the chart, 143.80 is now quite a strong area of resistance. as long as we stay below 143.80. Selling rallies is what makes sense. The fact that the RSI has been hitting oversold levels is proof that, you know, the path of least resistance remains lower. Don't forget that momentum indicators, oscillators, etc., are not there for you to use them to fade the trend. They are for you to confirm the trend and you know, start looking opportunities in that direction, because it's not it's not something new to hear, but obviously trading in the direction of the trend is much easier and much more profitable in the long term. Okay, so we covered this. Let me see what other questions we've had. Oh yeah, Euro Swiss. Yeah, actually, this is another one that reacted later than I expected. If you remember, we were having a look at Euro Swiss yesterday, which wasn't doing much at the time of the webinar. And, you know, I found it a little bit peculiar because I would have expected the Euro Swiss to react lower. But I said, but, you know, whatever, even if it reacts lower, keep in mind that it's not going to do something to write home about, simply because it will just, I mean, it will be unable to break within like a day or two this range. We've been trading in this 114.50 to 111.80 range for months now. What is it? Since, oh, actually, it's not months, it's almost a year now. So, yeah, it's like 9 months, whatever. So we've been trading within this range for 9 months. Yesterday, we dumped lower after the webinar. So we're now in the middle of this range. So, you know, nothing to do here. I mean, you have two options, as with in any range. You either start trading the range, which means every time we go close to resistance, you sell it. Every time we go close to support, you buy it, or you trade the breakout. So you wait a breakout either from resistance or support and buy it or sell it equivalently, and then expect continuation. So, you know, currently you can't use any of those two tactics simply because we are exactly in the middle of this range. So there's no risk reward to trade the range, and we're definitely nowhere close to a breakout. Skipped any other questions? Okay. No, I think that covers them all. Coach, are you here?
Yes, sir. I am, buddy. Listening to your roundup. I couldn't go throughout the day without it.
Thank you. So do we have a guest today?
We do. We do. We have Paul Bratby with us at Trading the Fifth. So Paul's in the house.
Perfect. So you can start like 3 minutes earlier. Since I covered all the questions, I think we can go ahead and, you know, start the interview.
Okay. Thank you very much, Steve. Hello, Paul. Welcome. Okay. Welcome back to Face or to Face. I have Alzheimer's disease, so I know I've interviewed you before. Not sure if it's happened in this format here at Face. You know? Wow, Paul. Will you turn down your amp and put down your Fender Stratocaster?
Hi, is it too loud?
It's okay now. It's okay, Paul. How are you today, buddy?
I'm good. I'm good. I'm just waiting for this pullback in the indexes to find support.
You can show your screen here, so you know picture speaks 1,000 words. There's a drop-down menu.
There we go.
Okay. All right. So, Paul, before we get to the markets, it's been such a long time since you and I talked. And I'm always interested, and the viewers are, because everyone starts somewhere. Can you take us back in the time machine a little bit and tell us how you got involved in the business and a little bit about your journey from where you were at point A before where you are now at B?
Yeah, okay. To be honest, it's really freaky. I've just written an article on Medium about that, actually, because I started trading part-time when I was in the British Army.
That's right.
You know, I was driving taxis to earn extra money. You know, I was going away on operations all the time, and I just started trading part-time, losing money, just trying to develop a strategy. It took a few years to get that part-time trading strategy under control, really.
How many years? How many years?
Probably, I would say 3 to 4 years. You know, you just think you get it right, and then market.
That's kind of the standard. That's an answer I get from a lot of good traders, that it took them 4 years to make breakthroughs, become more consistent, and really have the belief, not just in their head, but on their P&L, that they could do this. So, yeah, I mean, why should anyone expect it being less time? If you're going to be a carpenter or a plumber, you're an apprentice, then a journeyman. So just like trading, you have to put in the time and persevere. So how did you handle losses early in your career? Dissuade you?
No, it didn't, because of that military mindset. What it did was sort of spur me on to find a defined set of rules that I could stick to, and because I was quite disciplined. It's just that those early strategies weren't really good enough for all different types of market conditions. So I had to go through that learning process in those different conditions to try and find the right strategy. So those losses actually made me more determined to get.
Any help along the way by someone who influenced you and mentored you during this journey?
No, not
self-taught.
really.
Self-taught.
It's all self-taught. I read some books. One of them was High Probability Trading by Robert Miner. Now, unless you've got a maths degree, that is a very, very tough book. I had to read it 3 or 4 times.
Okay. Yeah, he's very good, though. Robert Miner, it rings a bell. So let me ask you this. How long did it take you to gravitate towards being an Elliotician, being an Elliott Wave practitioner? And what was it that attracted you to using this method?
So initially, Elliott Wave was very confusing to me, and that book is a prime example. Because what a lot of people try or expect or try to do is make Elliott Wave very, very complicated, because it can be complicated with inner waves and cycles, and there's lots of other things that go off in there. So what I did was I spent a couple of years learning and trying to dumb it down for me. Okay, and try and look for the basic rules. What's the best trade that could be? And for me, it was that 5th wave of the Elliott Wave sequence, because all the other rules had been met. So it took me a couple of years to really understand how to trade that 5th wave, whether it be day trading on futures, or whether it's Forex, or swing trading on stocks. But then I got my defined set of rules, which worked consistently. Yes, I would get losses, but because of my risk management strategy, only going into trade that had a risk reward of over 1 to 1.6, even if and my average win rate was around about 1.6% profit on the account balance. So, even if a win rate of 50%, you're still going to make money. So it was that 5th wave move, and we talked years ago about this, and I predicted a 5th wave move on the US dollar CAD, if you remember, on the daily, and it hit it to the T 6 months later. So it does work. It's about being patient, being disciplined, and sticking to the rules. It's like a checklist, and I developed that checklist on a piece of paper initially. So,
okay. So I see that you're labeling yesterday's pullback the end of 4, or does that box that goes from green to red say that wave 4 could be deeper than where we are now?
That's right. Yeah. So this rules-based system that I traded for a long time has now been developed into our software. So we, at TradeTheFifth.com, we've developed that software that revolves around my strategy. So this is the daily time frame on US dollar, on the S&P. So yesterday we hit our green zone. That's our 85% probability zone. The amber zone is 80%. and the red zone is 75%. Then it's going to go on and basically make that new wave 5 high. So at this moment in time, what we'll wait, there's the automated target zone there at 3018. But at this moment in time, after yesterday's candle, we need to wait for today to consolidate that support level, if that can happen. Again, we've got the open soon. Mr. Trump could make a tweet, Mr. Z could make a tweet, and everything just tumble again.
So how do you trade it? I mean, what are you going to wait for? Go ahead.
I'm going to wait for that support, and then I'm going to wait for it to start to move away. And then what I'll do is either use our 6-4 moving average high, which is this blue moving average here, which is an advance, or I'll go more aggressive with a regression trend channel down here for looking for an entry. But at this moment in time, I'm waiting for that consolidation. You know, I will wait for today to finish, see where it is, get confirmation the next day, and then start looking for longs.
Okay. So if we hold here today, you'll be looking for longs, and you'll label the low that we had yesterday or last night as the end of wave 4 with 5 to come. And how do you manage the risk on something like that? Say it plays out. Are you wrong under today's low if you look for a trade tomorrow on the long side?
Well, for the long side, this is the MT4 platform. What I'm going to do is I'm going to bring on the Thinkorswim platform, because I can show that easier here. Bear with me. I've got so many screens, I've got to find the chart first. There it is. Okay, so I'm just going to bring up the daily on ES.
And while I'm talking to you about this, Paul, you know, so you've done all the back testing, and you're convinced that wave 5, because all the other parts of the wave have already manifested, is the highest probability shot.
Yeah.
Aren't there times? Okay, so that's, you know, probability is great, but as an Elliotician, what about the money waves, like a C wave or a 3 that's normally an extension of 1, where I know enough Elliott to be dangerous, and 5s are usually have equality with 1. So isn't 3s and Cs really the money wave in Elliott?
Yeah, but 60% of...
Just lost him. Can you guys hear me? Yeah, I see my voice. Okay. Maybe I'll log back in. Paul Bradby, I don't hear him. He's offline. Okay. I know I ask tough questions, guys, but, you know, I know Paul, he was in the military. He didn't run away. It's technical. How you guys doing? He'll come back. He's offline. He's offline. What's it all about, Donald? Will we win the tariff war? Where is he? Oh, well, we might have to reschedule. Oh, boy. Okay. We're going to have to reschedule. Okay, so we had a problem with Paul. Paul had computer problems. His computer crashed. And let me just grab my screen to say goodbye to everybody. Well, you know, don't sweat the small stuff. Oh, now it's restarting. Okay, I guess we could wait. We'll wait a few minutes. How about that? Okay. Okay, Lena, for you. So what do you guys think? Is odds are you going to fail? It's under the line. If you get it back inside here, back over 40, that'd be a pretty good sign. But right now it's trying to put in a throw over. Still diverging though. And went with a little bit of Kiwi since it's the relative strength, you know. Aussie making new lows, Kiwi way off the lows from yesterday. We'll see if he gets back in here. Who loves space? Anyone out there? Where's the love, man? USD NOK, didn't Steve cover that? I think it wants another high. It is beginning to diverge though, but maybe one more high. Yeah. So let it take out all the buy stops over here first, and then next time it trades back under, say, 875, you could go with it. All right, well, so what? You're worried about? You can never be. Don't expect perfection at the crap table. How many people still expect that they're going to initiate their positions on exactly the right candle? I'm not saying it never happens, but it's the exception, isn't it? Than the rule that you're putting it on at exactly the right candle. And that candle will depend on your, I could be right on the right candle if I do a weekly or a daily, but I may not get the right candle on an hourly. You're going to join? What do you mean, Russell? You mean become a subscriber? Any other questions for me while I'm waiting for Paul? Cable? Cable, you know, when EG is working, cable looks weaker to me than euro. So, looks lousy. But I feel late. Actually, back here when we were just doing this, I thought we might get one more rally, but I don't know. Looks lousy. How's that? All right, Russell, you're subscribing. Welcome to our trading community. Once you're up, go into the members chat room and introduce yourself. Okay, you'll get a lot of support in there. I don't know if Paul's going to be able to get it together. Let's give him another 5 minutes. Any other looks I could help you with? You know, I think yesterday's candle in crude, despite what's happening in the Middle East, was pretty negative. Okay, buddy. You know what? It rallied 50%. That was enough. I mean, there's no rule after a top that we have to rally 61.8. You know, in here, I thought we'd go maybe even to 65, but you know, they took out, it was almost like a false breakout over 2.5. I'm not doing anything there right now. Are you, Alina? You're a shooter. Okay. All right, well, I don't think it's happening. Any other questions before I say don't just count your pips, count your blessings? And Russell, anyone else going to do what Russell just did and sign up today? You're welcome, Elena. Anyone else going to go and start getting paid back by their broker by going to talk to Trent Justin at Forest Park FX, either to pay for the letter or to get a check every month? If you're not getting anything back from your broker, yeah, it's it's nice of you to be a humanitarian, but they don't need it as much as maybe someone who's homeless. Okay, so I mean, well, how about you get a rebate check and you spread it around to people that don't know where their next meal is coming from. You guys do. Just an idea. All right, everyone, I'm going to wrap it. Good luck the rest of the session. Go join the crew in chat. We have a great guest tomorrow. He's becoming a regular. Trader 1SZ, Saeed Zyman's going to be with us and all his groupies. So I'll see everyone tomorrow. Okay. Thank you, Joe. Okay, same to you, everyone. Cheers, Russell. Appreciate you supporting what we do here. All right, everyone. Adios.